Hello, everybody. I'm Chad McMahon with Protect with Insurance. This life insurance episode is on mortgage life insurance. So, first of all, what is mortgage life insurance? And then I'll go into how does it work and what are some important things that you need to know. Mortgage life insurance is known as a lot of things. It's known as mortgage protection insurance. It is a policy that's structured as term life insurance. All mortgage protection is built this way if it's done correctly. It's built as term life insurance, the same duration, same term as the length of your mortgage. And upon your death, or depending upon the program and depending upon the company it's through, if you get diagnosed with a whole bunch of different conditions, or if other things happen as well, then your mortgage gets paid off. And this happens in the form of one tax-free check that comes from the insurance company, and it does not go to the lender. It comes to your beneficiary. If the event that triggered the payment of the policy, so let's make this very simple. Let's say it's a $300,000 mortgage. So you get a $300,000 mortgage protection policy. Upon your death, a $300,000 tax-free check comes to your beneficiary. Let's say, just to make it easy, that it is your wife that receives this check. You die for any reason, they send $300,000 and one tax-free check to your wife. Now, again, depending upon the program and depending upon the company that it's through, let's say that the policy also pays in full if you're diagnosed with something that is terminal, diagnosed with something chronic, or even critical. And critical can be quite common. Chronic is becoming more and more common as well. And over the next 20, 30 years, we're seeing, and the forecast on this is kind of shocking, but we're seeing a trend towards more and more higher percentage of chronic and critical conditions, and it's becoming the new normal. So if you have a policy that has a built-in full payout, full payoff of your mortgage for chronic conditions, that's very, very important. So again, sticking to the same example, $300,000 mortgage, your beneficiary is your wife. If something occurs, such as you get diagnosed for a critical, chronic, terminal condition, and those are all built into your policy, then the insurance company, they're going to send that's called a living benefit if you're alive and they pay. So in those situations, they send you a $300,000 tax-free check. And again, these are becoming more and more common. So let's say you have the policy for 3 years and you have a heart attack, and critical conditions pay 100% as part of your policy. Then they're going to send you 3 years into the policy, they're going to send you $300,000. It's tax-free. Policy ends. It's over. No more payments on it. You don't owe them anything. They don't owe you anything else. It's over on your policy. So that is a good example of something that's becoming more and more common in how important these policies are. And so when that check comes at 300,000, let's give another example. Let's say this occurs in 20 years and it was a $300,000 mortgage when you started 20 years ago. So we set it up today, and then in 20 years from today, you die for any reason. Okay, let's just stick with kind of a classic here. So you die in 20 years. The insurance company, they send your wife a $300,000 tax-free check. Your wife deposits that check, pays off the mortgage, and let's say now, because it's been 20 years, the mortgage is paid down quite a bit. And let's say that $100,000, I'm not doing this accurately, this is just for easy math. Let's say $100,000 is still in the mortgage and $200,000 has been paid off. Okay, that's not really how the math would quite work out, but again, just for easy math. So your wife takes $100,000 of that and pays off the mortgage. She still has $200,000 in the bank, no taxes due on that. And that $200,000 is going to make a big difference financially for your wife. So that's how that works. Okay, if something happens really, really soon, well, you get the mortgage paid off. If something happens down the road, you get the mortgage paid off, and then you have all of that extra money. Either you have it, depending upon if it's a living benefit, or your beneficiary has it if it was due to death, and it's all tax-free. Okay, so that is how mortgage life insurance works. And there's something else that's important for people to know that are considering. It's obviously a very important kind of a policy. A lot of people that get mortgages, they get mortgage life insurance. There's something called private mortgage insurance. It's PMI. It's not the same thing at all. And here's what a lot of people don't understand. It does not benefit you. I'm going to say that again. Private mortgage insurance, PMI, does not benefit you. PMI is something that's built into nowadays pretty much all conventional loans. You go get a loan to buy a place, and the lenders require PMI, and they require that you pay for it. It's not very expensive, but they require that you pay for it. They require that it's part of the policy, or they will not write a policy for you. It's not because you're being singled out. It's not because there's anything wrong with you. It's because it hedges against their risk. It reduces their risk. If they have a small policy, something happens to you and you die during the course of that loan, there's a calculated risk, a calculated cost to the lender. And so that policy is something that sends them some money upon your death, but it does not pay down that mortgage. It's very important that you understand that. So the PMI doesn't protect you. It only protects the lender. It's required. There's nothing you can do about it. So, crying about it is not going to do any of us any good. It'd be nice if it wasn't required, but it is. It's a small cost. So that's why mortgage protection or mortgage life insurance is so, so important, because that protects you. That's for you. That's for you, and that's for your loved ones. That's to make sure that that mortgage is paid off, and that upon your death, or again, the living benefits, that it's taken care of. So I hope this has been helpful. It's a very, very important type of life insurance, and taking care of that mortgage to protect that home so that there's a tax-free shelter. I've seen it happen too many times where there's no mortgage protection in place. There's no mortgage life insurance in place, and the home is lost due to foreclosure because it's not affordable to keep it, or there's a big time crisis and it has to be sold really quickly because it can't be afforded. And so there's no money made on it. It's just kind of breaking even, or a tiny bit of money is made on it. And the difference between that and having a policy in place to take care of all of it, obviously that's a very, very important thing, and you want to take care of your family. So I completely understand that. So if you have more questions, please just reach out to us, reach out to me. You can always email us at hello@protectwithinsurance.com. You can always call us or text us at 928-323-0933, and we'll be happy to help you. All right, take care. Stay safe out there.